Hey, this is Matt from InvestiQuant. Today is Thursday, January 13, 2022. Yesterday, we saw a day of indecision. You see the S&P chart up here in the top left. We kind of just consolidated out after the gap up yesterday. We closed right around where we opened for the session. Today, we have a gap up that has continued lower the majority of the session. We are currently trading just below yesterday's low, well below yesterday's closing price. But what we're going to look at this afternoon is a follow-up on the study from this morning that looked at that doji candlestick we had yesterday and see what has happened when we get some movement to the downside following that. So let me go ahead and get this set up. We've got a 3 p.m. entry time set here as a long. It'll exit at 4:15 p.m. Eastern time. Now this morning what we looked at was opening within the prior day range. Let me go ahead and grab that here from the opening area, and the price pattern was day after a doji in a weak bull market environment. So I'm going to grab all of these and then head over to the post-open filters, and I can just add a little bit of information around what we've done. So we are trading below the close of that doji day that took place yesterday. So I'm going to add that to the test by going to this intraday close versus daily level. So I'm going to hit equals for less than prior day close there, and that's going to mean that the 3 o'clock price is below the closing price from the prior day, which would be the doji day. All right, so that's all I'm going to add here. Let's go ahead and click view results. All right, here we go. These are the results based upon entering the market long at 3 o'clock Eastern time, exiting at 4:15 p.m. Eastern time. When you open within the prior day range, the prior day was a doji candlestick day that finished below a 10-day simple moving average, but above a 200-day simple moving average. And then at 3 o'clock, you are trading below the close of that doji candlestick. Historically, there are 35 samples here in the S&P dating back to 2003. We've got 42 in the NASDAQ, 40 in the Dow, 38 in the Russell. Win rates on these are mostly neutral, with the Russell being weak. So the S&P is coming in at 51%, the NASDAQ 48%, the Dow 53%, and the Russell 34%. So quite a bit weaker than the other three instruments. If we look at the average moves on them, you'll see the average loss quite a bit larger than the average win for the S&P. That is also the case for the NASDAQ and for the Dow. The Russell has a larger average loss compared to its average win as well, just not quite as skewed there. So this is very similar to what we looked at this morning in terms of what has happened historically with it. Is the bigger moves have certainly been to the downside. That is playing out so far today. The win rates on the entry at the open were just a touch weak this morning. Not real different from what we're seeing here, but it was really the bigger moves to the downside, and that carries through into the afternoon here when trading below the prior day close. So very similar there. Hopefully you found that helpful. Good luck today. We'll see you next time.